Ladies and gentlemen, I hope you had a restful weekend and you're ready for a crazy week ahead with AMC stock and potentially a short squeeze. That is because of the courts, and maybe we finally got some justice in the court system, although the regulatory agencies have turned a blind eye on AMC. Well, Morgan's Earn did not. So, AMC stock rallied 63% in after hours on Friday, was up over 100% at the highs. What does this mean? What's going to happen with AMC and what's going to happen in the broader markets that could affect AMC that you need to know? Let's go ahead and dive straight into it, because why the hell not? Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with us live in real time, I think there's so much opportunity in some of AMC's options as well. If you don't have a trade in them right now, this could be like buying AMC back in the beginning of May of 2021, before anything really happened. You would have made thousands of percents on your trades. So, not to spread too much hopium, but I mean, it's hard not to be hopeful and optimistic considering where the data is currently for AMC. So let's talk about just that. AMC stock on Friday and after hours closed at $7.17 per share. That means that the shorts got blown up. The option buyers got blown up. Now, AMC is like nothing I've ever seen before. Like literally nothing I've ever seen in any other stock. Where we currently are. Even back in June and January of 2021, yeah, firms were massively short in AMC, but they hedged. They had some form of insurance. Hedging is insurance in case events like this happen. This time around, none of them were hedged. They all were caught off sides and caught off guard, and they just lost about $1 billion, including their option trades that we have seen in the past week or two, as well as the actual short position. Not to mention, it's kind of crazy to think that maybe none of these hedge funds or institutions had an insight to what the judge was going to do. Typically, before a big catalyst like this, you'll get some kind of trading that kind of leads you one direction or another. What I mean by that is days or even a week or two before a big catalyst comes, maybe it's earnings, a stock might rally into earnings, for an example. And odds are someone knows there's going to be good earnings, so that's usually a good sign. Well, to the contrary, if the stock falls heading into earnings and falls aggressively, that usually means someone knows earnings are going to be bad. Well, this time around, what we've seen with AMC is the short interest ballooned right before this negative catalyst, right before this ultimate fuckery of the shorts took place. And let's give you the raw numbers. So, short interest, currently sitting at about 29%, the last official reading that we got. The short score is at 96. It's never been at this level. Back in January of 2021, the short score was in the 80s, about 84. And back in June of 2021, the last time you've seen a rally that this could be compared to the short score was at about 72. So you've never seen a short score at 96. Reason for this is the days to cover. Days to cover is at 10.22. This has increased 93% in the last 3 months. The best way that I like to look at this is obviously the textbook definition says higher days to cover means it's going to take longer for shorts to cover on short positions. What I really like to look at here is shorts have been adding to their positions at the same time volume has been dropping. So this is a simple calculation of taking the average volume and dividing that by the amount of shares currently outstanding. So the amount of shares, sold short that are outstanding. There's currently about 145 million shares outstanding. The average volume in AMC has been about 15 million every day for a long time, sometimes 10 million. When you average that out, you're roughly 10 days to cover on short positions, or to equal the amount of shares sold short. That'd be about 14.5 million for volume on average for the last 30 or so days. the number is going to change on the amount of time of days you're looking at. But that's the simplest way to look at it. So if volume increases, well, that means it hasn't happened in a long time. That there's a big short position, volume increases. If it's bullish, that usually is a lot more bullish. And that's why the short score has risen to levels that you have not even thought were possible with AMC. Simply put, volume has been lower. Now, cost to borrow fees, guys. Hedge funds, institutions that were short in AMC get no relief anywhere. Cost to borrow fees at the time of recording this video, 1,000% on Interactive Brokers, and I doubt it's going to get any better from here because there's probably going to be a lot of demand to short AMC still, and there's probably going to be a lot of demand to cover on short positions. Those two equations, if you consider apes probably own 80% of the flow, and there's probably 100 to 150% short interest anyways on AMC. This is something we've talked about for a couple days now, like a week or two. Well, there's probably not a lot of shares out there. There's probably not a lot of relief to these cost to borrow fees that we could expect really anytime soon. So that potentially is a problem for the shorts that have to pay these 1,000% cost borrow fees. Not an ideal situation that you want to be in if you are short in AMC. On top of everything else going on, you're getting whacked on these cost borrow fees. Even if this trade went through alone, it looked like a lot of shorts were going to be unprofitable here based on the cost bar fees. Well, now AMC just rallied 63%. That's a big problem. Now, cost bar max from Ortex is at 1,050%. Cost bar minimum 971%. Cost bar average 984%. So just across the board, getting absolutely screwed. Now, I find it very funny that, you know, the last minute of trading on Friday, you've seen hedge funds institutions buy about 14 million worth of options. The last literal minute of trading, and it's over 15 million if you look at these two trades as well. They lost over 50% on that instantly. Like maybe 10 million in losses just like that. Talk about bad timing. But that's not to mention the other big trades that we've been going over every single day over the past week. Not to mention a week or two ago that you know, people bought these trades for August 18th has been a very big option expiration. Just the past week, you have seen 287 hedge fund institutional orders worth $170 million with a positive order value of 1%. This is not good. Now, why I say hedge funds institutions have not hedged at all, look at this put to call ratio. This would tell you hedge funds are the least protected to an upside move than they have ever been in AMC. Back here in January, June, they were more protected then. They are unprotected now. So I think we really need to see if you start to get some bullish positioning, if you start to get some hedge funds institutions going out and buying calls and protecting from potential, you know, losses that they could see. I'm not so sure you're going to see that, considering it's going to take so many options to do that. Let's go ahead and do a little bit of simple math here, just while we're on the topic. 145 million shares are sold short. Divide that by 100, because every option controls 100 shares. That means you would need to see about 1.5 million options placed to protect all of the shorts that have shorts outstanding. And if you look at some of these trades, I mean, this $8 million trade, you've seen 1 minute left. Let me rephrase that. This $8 million trade, you've seen placed 1 minute before trading ended on Friday. That was only 12,000 contracts. So you're going to have to see just insane dollar amounts heading into AMC options to hedge this out, because this is a big problem. They're not hedged out. So that's what they probably face here. Do we cover, or do we spend a fuck ton of money to hedge out on our short positions? Who knows? Ultimately, I don't know. So that's what I'm currently looking at. Now, we'll talk about in the next video where I think AMC could go. I think that really needs a video to be dedicated to itself. I want to take the time in this video to go over what's going to be happening in the broader markets as well, because AMC is not immune to the broader markets, but if the broader markets do fall, if your big tech, your indices do fall, that could be a big problem for the shorts as well, because they're not only losing their ass on their short positions, over $1 billion on Friday alone, but they could be losing their ass in their other investments as well. Most notably, earnings on Tuesday. I think this is by far the biggest catalyst for the broader markets. Microsoft and Google, your trillion-dollar companies, these are your two rock stars reporting on Tuesday in after hours. That's going to be huge. Very important. If they have bad earnings, it's going to be even worse for the hedge funds and institutions. Just when things could not get worse, they could get worse. Meta on Wednesday, that could also be a big one. And then Intel, Ford, Enphase, Roku, MasterCard, Southwest, McDonald's, Royal Caribbean, Crocs, Honeywell, T-Mobile, AbbVie, Dexcom. Some of these other companies going to be reporting on Thursday. And then some of your oil, as well as pharmaceutical companies like AstraZeneca, Chevron, and Exxon will be reporting on Friday. So earnings are going to be a big story of this week as well, and that could definitely move the markets quite big. Now, the second biggest story of this week is going to be Fed Jerome Powell on Wednesday. It's likely Powell helps the markets here, maybe to some degree. I think the markets have already priced in this is probably the last rate hike and expect some dovish tone of voice from Fed Jerome Powell. He's probably not going to hawk down on us on Wednesday. That would be very surprising. That could give you a bearish reaction in the markets. But I don't really think this is a huge potential bearish catalyst. I think this could be more bullish rather than not, as long as Powell doesn't signal further rate hikes to come. And just the inflationary data we've gotten has not been very supportive that's what we're going to get from Powell. Now, on Thursday, you're going to get GDP growth rate quarter over quarter and durable goods orders month over month at 8:30 in the morning on Thursday. You want to see this data come in good. If it comes in bad, we have a problem. This is not 2022 anymore, where good economic data causes sell-off in the markets. Bad economic data caused a rally in the markets. You want to see that soft landing narrative continue to play out, right? Well, obviously, if you're in AMC, then maybe you want to see the markets fall. Maybe you want to see really bad economic data, and that might help, obviously, crush some of that liquidity. And then on Friday, core PC price index month over month for June, as well as personal spending month over month for June, and personal income month over month. All of these expected to come in roughly in line with what we've seen last month, but you are expecting a core PCE month over month reading, decline from 0.3% to 0.2%, and you are expecting personal spending to jump quite a bit from 0.1% last month to 0.4% this month. So I really don't think any of this, the Fed or any of the economic data, is going to be nearly as important as the earnings. I think that's the big story, and that could really be the thing to kind of squeeze out some of the liquidity in our markets, guys. So that is basically it for this video. That's what you really need to know as far as big data and things that could affect AMC, could also help move around the stock. But all in all, I mean, you want to be long in AMC right now. And if you want to be long in AMC, and if you want to come trade with us, we will be trading this. Link down below in the description of this video to join the trading community. You go over to Patreon, you sign up. If it's not your thing, you cancel, you leave, you do your thing, right? It's worth trying. It's worth checking out. That's all I'm going to say about it. Link down below in the description of this video. You guys have a great rest of your day, most importantly, and I will see you in the next one.